Hello, welcome to this Autovista Group webinar. Today, we are cracking the code. More specifically, we're taking a look at Chinese EV brands entering Europe. I'm Tom Geggus, the editor of Autovista 24, and I'm going to be your moderator today. Now, unfortunately, Christoph Ruhland couldn't join us, unfortunately, but please don't worry because you are still in excellent hands. On that note, I'd like to invite the panel to introduce themselves. Christian, I'd like you to start us off if you could. Now, if you could let us know all about yourself, and maybe while you're at it, I thought we'd start with a thought-provoking question, just to get us started. Will all of the new brands entering Europe from China crack the code and find their place in the market? Bit of a difficult one for you.
Thank you, Tom. So I think I start with the easy one first. So hi, everyone. I'm Christian Schneider. I'm Director of Valuations at Autovista Group, meaning that I'm responsible for all residual values that we are setting across Europe. I'm with Autovista Group now since 11 years, before with our EV volumes team, so dealing for the last 2 years or 3 years now with global electrification trends. And maybe for the harder question, if all of them are going to crack the code, that's really a tricky one. So it is, in the short run, I think a lot of brands will try to crack the code. So we will see quite a few brands appearing on the European market. But in the long run, I mean, as you said, it's a provoking question. Of course, not everyone will crack the code. We already see in China, for example, that we have between 100 and 150 active brands operating in China at the moment. And we saw already a lot of pressure in the Chinese market, that even in China on the domestic market, quite a few of those brands are not in the market anymore. So they have been consolidating with other brands, or have gone bankrupt or stopped some programs. So already in the domestic market, some disappeared and they haven't cracked the Chinese code in China, let's say it like this. So I think also in Europe, we will see that not all of them will be successful.
Okay, thank you very much. Good answer to a hard question. But Christoph Ruhland, I'm going to come to you next. If you could tell us a bit about yourself and give that question a go.
Yeah, thank you, Tom. So I'm Christoph Ruhland, Director of Business Development at Autovista Group. And as such, I am responsible with my team for all new brands that are currently entering Europe. So mainly Chinese brands, not exclusively, but since 3 years, I'm dealing on a day-to-day basis with Chinese brands. I'm traveling a lot to China and I know a lot of their plans. And yeah, to answer your question, I have the same opinion than Christian. So on the Chinese market, the competition is very, very fierceful at the moment. So to say it frankly, it's a bloodbath. Yeah. So it's clear that we will see a consolidation over the next 5 years. But there will be for sure some brands that came to Europe to stay.
Wonderful. Well, thank you both very much. So I think maybe it's time that we get into the meat of the matter and we take a look at what we're going to cover today in our webinar. Well, first of all, we'll be taking a look at the strategic and economic backdrop, what those EV brands from China are actually entering in Europe. And then we'll be taking a move into which brands have actually entered Europe, taking stock of what's happened. And then finally, in the third part of the webinar today, what actually works in Europe and which strategy is working. Now, of course, as with all of our Autovista Group webinars, we'll be ending today with a Q&A with our 2 fantastic panelists. So if you have any questions throughout the webinar, please don't be afraid to submit them. We'll, of course, strive to answer them by the end of today's broadcast. But if we're not able to, if we simply run out of time, please don't fear. We will reach out to you afterwards with some answers to your questions. Now, without much further ado, I think we should get into our very first question. Christian, I think understanding the market that the Chinese brands are trying to break into is a really pertinent topic. Maybe you can walk us through what is currently going on in Europe. How far along is the region on its electrification journey?
So what we can see on the next slide, Tom, is the fuel or propulsion type split in different regions across Europe over time. So we see in the blue area, the development of classical or traditional ICE fuel types, in purple of plug-in hybrid vehicles, and in green of pure battery electric vehicles. And if we stay for a second with Europe, so our main region that we cover at Autovista Group, we see that over the past, so I mean from 2019 to 2023, second half 2023, the battery and plug-in electric vehicles share in the market was growing continuously. But since mid of 23, beginning of 24, we saw that quite a few governments were cutting some incentive schemes that they had in place. So Germany as a big economy, but also Sweden as another example, were phasing out their incentive schemes. And we saw last year in 24 quite even a slight going back or stable development of those electrified vehicles, so plug-ins and battery electric vehicles together. Luckily, since this year, so the first half of this year at least, we saw quite a growth or recovery of that small downturn, and we see that those vehicles are on a growth pattern again, I would say. But if we speak about the Chinese brand entering Europe and give a little bit of context, I think what would be, of course, also important is to look on their domestic market. So what is going on in China at the moment? And what we can also see in our EV volumes data that we are showing here is that, the Chinese BEV, but also plug-in share was booming over the last years, especially if you compare it with Europe. And we don't see such a strong dip in 24 that we saw in Europe. Slight dip for BEVs in China last year, not dip, but not as strong growth rate like before. But that was compensated by a huge growth of plug-in hybrids. And maybe also worth to mention that a lot of those plug-in hybrids that we can see here are range extender vehicles that we also classify as plug-in hybrids. So it's basically a battery electric vehicle with a small ICE engine that can recharge the battery in case of the batteries running low. And just to complete the picture of the big regions on the globe, we also have North America with us. Traditionally, North America had always the lowest electrification level in those big regions. And with the new government and in the US and shifting back more from greenish policies and subsidization of EV buying or purchasing, we even saw that on that low level in 25, it is slightly dropping now. It's not a lot because the level is low, but we see a more stable until dropping or decreasing development in the US for electrification at the moment.
That's really interesting. Thank you, Christian, because I think as well for entering Europe, we often talk about Europe as just one region, but of course it's not. It's many different countries. So could you talk us through how the regionality of Europe impacts electrification and what that means, what that could mean for Chinese EV brands?
Yeah, you're absolutely right, Tom. Especially if you're speaking about cracking the code of Europe, there's not one code to crack, and this is maybe what is also making it so complicated. Every country has its specialities and different policies in place, different subsidies in place, different tastes in place. And this is what we can also see if we just speak about EV adoption across Europe. So we see that maybe not too surprisingly, the more Norwegian or northern countries in Europe are leading the pack in terms of electrification. So Norway, nearly every car sold in Norway, we have 87% in the first half of this year, has a plug, most of it even fully electric, 85% fully electric share in Norway, mainly driven by a lot of strong incentives in the past in Norway, but also a relatively, very cheap energy costs in Norway compared to other countries, which is making BEVs very, from a TCO perspective, very competitive. And of course, also the income level of Norway is one of the highest that we see in Europe. And as we know, battery electric vehicles, at least from a pure list price perspective, are more expensive than ICE cars still. And if you have a high income in the country, that is making it easier to drive electrification, of course. What was a little bit more surprising to me is that Portugal, as more a southern country, where we see in southern countries normally a lower electrification trend, also has a 30% electrification level. So nearly every third car that was sold in the first half in Portugal this year had a plug. And I think that was for me a little outstanding in this list that we can see here. It is also driven by governmental policies. There are incentives still in place in Portugal for new car buyers, but also the geographical aspects of Portugal. So it is a long country, but not very wide. And the distances that a typical driver is driving Portugal are smaller than, for example, in the neighbor country, Spain. So this is very beneficial for driving an EV as well. And of course, the climate conditions that we also have in Portugal. It is not super cold, and we know that if it's very cold in a country, the range is not as great as we see in WLTP figures. So this is also quite beneficial for Portugal. Yeah.
Really interesting. Great highlights, I think, of the regional disparities that you can see across Europe. Well, thank you very much, Christian. That is actually the end of our first segment, if you believe it or not. But don't worry, we still have much to come, including a look at the different strategies that Chinese brands are using on their entrance into Europe. And then, of course, we'll end our webinar on that Q&A, as I so tantalizingly mentioned at the start. So please do get your questions in. I can already see we've had a few, so thank you to those people who've already submitted questions. Now, as I said, I think it's time for us to really take stock of the brands entering Europe. Who's already here, Christian? Can you take us through the brands that we know about?
So we can see, I mean, a huge variety of brands at the moment in Europe. And on the next, yeah, perfect. Thank you, Tom. And we listed a few of them on that slide, but of course not all of them. I just want to mention it in the beginning. So if you are in the webinar and you cannot see your name here, I'm really sorry, but otherwise, I think the bubbles would be, we need a bigger screen to see all of the brands at the moment in Europe. What we try to do is, especially for this webinar, to explain a little bit how we cluster the brand origin of all of the brands that are active at the moment in Europe. And depending on which article or source you're reading, some of the brands from China or the Chinese headquarter maybe, they are sometimes treated as Chinese, sometimes as Europeans. So it's quite different. So we want to directly in the beginning set the scene, what you can see in the next few slides. So there are, so you can see in the green circle, traditional European car manufacturers, I would say. And in the orange circle, you see all Chinese brands, or a few of the Chinese brands that are active in Europe at the moment. And in the middle of those two circles, you see some brands where, again, depending on the source, some are treating them as Chinese, some are treating them as European brands. What we did as Autovista Group is we looked on how are the brands perceived from a end customer's perspective. Are they think more it is a Chinese brand, or are they more perceived as a European brand? And this is why we decided for those 5 brands, where it is maybe not always super clear where to put them, that they are sticking more with the European brand origin taste of European customers. So LEVC, Volvo, Polestar, Smart, and Lotus are in our analysis, we treat them as European brands and not as Chinese brands.
And how are some of these brands really performing, Christian? Is performance consistent across the different European markets?
Definitely, they perform differently. But what we can see, maybe before we look on different markets, what I think would be very interesting to look on is how the brand share, or not the brand, I mean the share of Chinese brands of the total BEV market and plug-in market. So this is where most of the models, I mean, play a role of Chinese brands at the moment, are performing. And we can see on the left the share of Chinese brands, but also German or US brands of the total BEV market. Again, quite important. It's not total market share, it is of the BEV market. And what we could see in the orange line, so this is the line for the Chinese brands, is that over the last year, the shares in the EU, sorry, it is the EU also, and it's not Europe as a whole, it's the European Union. We see that their share has been quite stable, always something between 5 and 7%. So it has been quite stable, and we saw in the second quarter this year compared to a year ago a growth of 1 percentage points for the Chinese brands of the BEV market. But what is maybe even more interesting is to look on the plug-in sales. So in the same period, where also the tariffs on Chinese brands hit the European Union, and the tariffs are only applicable for purely battery electric vehicles, but not for plug-in hybrids. We saw a growth of plug-in sales, or of the share of Chinese brands on plug-in sales, of 7 percentage points in the same period. So it seems we are shifting a little bit away from imports from Chinese brands in the European Union, from purely battery electric vehicles to plug-in hybrids, which are not hit by the tariffs that we have in place in Europe at the moment.
And as you say, Christian, that's very much in relation to the EU. So maybe if we step back for a second and then look at how these brands are performing in Europe, so outside the EU, how have tariffs maybe had a big impact? If we can take a look at that question as well.
Yeah. So I've looked on that question as well. So how did the EU Chinese brands in the EU are performing compared to other European countries which are not in the EU, so which are not affected by tariffs. Just keeping in mind, we saw in the last slide in the EU, the share was growing by 1 percentage point for Chinese brands, and we see for the UK a growth rate of 2 percentage points and Switzerland of 3 percentage points. So it is a little bit more, but it is not really significantly more what we can see at the moment. So my thesis would be that the tariffs that we put in place in the European Union don't have such a strong effect yet on Europe. So maybe we will see that developing a little bit differently going forward. But at the moment, we don't see that the growth rates in the EU are significantly lower than in other European countries which are not affected by the tariffs.
Now, of course, we've looked at the EU, we've looked at some countries pan-Europe. I think it's time that we break into some of the real regional differences. Christian, how are these brands performing across such a diverse regions Europe?
Yeah, so it's like with the electrification level. Europe is not, we always say it's Europe or European Union, but the taste in the countries or the behavior of the countries could be quite different. And what we see on this map is that the Chinese BEV share of the total BEV market, again, by country. And we see a relatively clear picture between middle or northern European countries and southeastern European countries. I would say there's it's called the border in terms of how those countries behave in terms of Chinese brand share. And we see that countries like France or Germany, for example, with a relatively high income, but also with a very strong domestic car manufacturers in place in both of those countries, that the share of Chinese brands is not extremely high, so we are at roughly 5% in both countries. But we can also see that in more southern countries like in Spain or Portugal, Italy, or also eastern countries, that there the share is significantly higher than in those northern countries. So we are in most of them more than 10% share. And this is, of course, also coming from a slightly lower income level in those countries. So as I said before, BEVs are still more expensive from a new car perspective than comparable ICE models. So if you have less money in your pocket, you maybe are more open to cheaper alternatives from other regions or other brands than that you are used to. Local domestic car production is not playing such a strong role as well, like especially France and Germany. We are looking on shares of the total BEV market. We also have to have that in mind. So the total BEV market in those countries, of course, is also smaller than in northern countries. what we saw on the slide before. So it is also easier with a few more units or few models entering those markets to gain relatively quick a higher share of the BEV market. Yeah.
Now, for this next question, Christian, it's important to mention that Autovista Group has been running some polls on LinkedIn. And first of all, if you aren't following Autovista Group and Autovista 24 on LinkedIn, you really should, so please reach out to us. And second, on those polls, we asked about new brands and EVs. And one point that seemed to just keep on coming up and was of real interest to our audience was residual values. So, Christian, maybe you could give us a real quick insight into what's going on with RVs for these brands.
Yeah. We also were running, of course, an analysis on how our new brands or new brands from China are performing on the used car market, or what we expect how they will perform. So on this slide, we see forecast values grouped again by their brand origin, like we saw before. So we have a line for China, for other Asian brands, and for the EU or US together. Maybe worth to mention that those averages are volume weighted with new car sales. So cars which are sold more often are getting a higher weight in those averages. What we could see on the left side for Germany is that in the beginning of this analysis, so January 23, we saw a quite wide gap of 16, 17 percentage points between the averages of Chinese brands compared to Asian or European brands. Over time, over the last 2.5 years, that gap was shrinking to only 9%, but we still see on average quite a significant gap still on the performance. On the other side, so on the right side, we see Spain. Spain has had continuously over time a smaller gap than in Germany, so always around 7 percentage points. Again, in Spain, we don't have such a strong domestic car market. I mean, yes, there's Seat and Cupra, but not as many brands as we have in Germany. So the gap is a little bit smaller over the whole time period, only 7 percentage points, but it is also not getting so much smaller like we saw it in Germany. I think it is really worth to mention that we are looking on averages here, again, of all brands, and it's good to get a first overview. But like always, it really depends on which brand we are looking on. So if you pick a combination of, it could be that this gap is even bigger of a certain European and a certain Chinese brands, but it could be also that the gap is smaller, or maybe in extreme cases even slightly different. So it really depends again on which brand we are looking on and which model we are looking on. Some are doing better, some are doing worse. It's the same for the Chinese brands, like it is also for European brands as well.
So a good indicator, but yes, you need that level of specific information for each brand. Thank you very much, Christian. So I think that brings us to the end of our second segment and very quickly into the third. But of course, before we do, there's still the Q&A to enjoy at the end of today's webinar. And again, more questions have been piling in, so thank you. We will get to those at the end. And if we can't, of course, we will reach out to you afterwards. So ask away to your heart's content. So, Christoph Ruhland, thank you so much for waiting so patiently. Christian just gave us a great insight into how different brands are operating, and there are a lot of different strategies at play. So maybe you can talk us through what they're doing right and perhaps where they could improve.
Yeah, thank you, Tom. I'm happy to do that. So the aim of the third and last session is not only to look at how Chinese OEMs can enter the European market, but also how they can succeed in the long run. And to structure things clear, I will organize my thoughts around 4 main areas: research and development, product, sales and after sales, and marketing. And importantly, I'm not here to judge any brand. So the examples I will show are not about saying who is doing a good job or a bad job. So instead, I want to point out common patterns, what seems to work well in Europe and where there's still challenges. So to start with, I think it is common sense that Chinese OEMs bring already strong technology, very, very fast development, and the ability to scale quickly. And starting with R&D, I think it's no surprise to say that Chinese OEMs they are at least competitive in battery and charging technology, if not leading the game. Yeah. Chery and BYD has already announced local production in Europe, which is not only a strategic step to avoid tariffs for BEVs, but this will also enable those corporations to produce truly European products for the European market. Because the downside, what we currently see, is that Chinese OEMs are selling in Europe what they currently have in China. At least these are the majority of the models. And honestly, Western OEMs did the same many years. So we sold in China what we already had in Europe, but this doesn't work anymore since a few years. There are R&D centers of Chinese OEMs in Europe, mostly in Germany, but they are still small and they are lacking influence.
Maybe you could talk us through the research and development phase a bit more, Christoph, because I understand that Chinese brands are able to develop their cars quite quickly.
Yeah, that's true. So if we move to the next slide, we will see some development times from Japanese, European, US, Korean, and Chinese OEMs. And these is the typical average development time for a new BEV if the platform is already there. So it's not the time to develop a platform. This is the average time to develop a new model. And as you can see, Europeans and Japanese, they need the longest, so between 42 and 60 months. So they are more the perfectionists. Yeah? The US can do it a bit quicker. Koreans can do it within 3 and 4 years. But China, so Chinese OEMs, they can do it between 18 and 24 months. And 18 months is now more or less the average. And last week at IAA in Munich, I was talking to an EVP from a very big Chinese corporation. And he told me that they will try to bring these 18 months now down to 12 months, which is, frankly speaking, just insane. Yeah, 12 months. Yeah, so for European OEM, this is unthinkable. And of course, this is possible because Chinese OEMs have a very strong vertical integration. So this, of course, helps to save time if you develop a lot of things in-house. So think like BYD, they are their own battery producer. The presence of thousands highly skilled engineers, of course, is also helping. And of course, the famous China speed is making this possible. So there are shorter test phases in China, so less kilometer, but they're not compromising on security. So they receive very good NCAP results. And this enables Chinese OEMs to react very fast to changing customer demands. So this is, of course, a strategic advantage. If you move on to the product section, then we see that the build quality in all Chinese cars I've seen is surprisingly high. So it's clearly on the same level than legacy OEMs here in the West. So this was something where at the beginning, a few years ago, we thought this could be a weak point, but it's clearly not. Another very strong advantage is the high level of standard equipment that all Chinese cars have. So there is, in fact, not a poorly equipped Chinese car on the European market. And this is, of course, helping residual values. So standardizing useful equipment and not making everything optional. So this is helping residual values. The downside of this is, of course, that these high equipment levels prevent truly low entry prices. So a good example for this is NIO. So their cars are packed just under the roof until with high technology. And this, of course, is then difficult for them to realize very low entry prices. Another point I want to highlight is how you operate the car. So when you sit in the car, there are differences between what a Chinese customer wants and what a European customer wants. So for a Chinese customer, the more things are digital, so the more functions are integrated in the touchscreen, the better it is. It's more modern, it's clean. So this is modern. But for Europeans, to take your finger, move it forward and try to hit a tile on a touchscreen is not really a premium experience. So for some functions, Europeans still value real buttons. And the Chinese cockpits, they have more or less all the same layout, and this is a little bit limiting the space of personalization that Chinese OEMs could create in the interior.
This sounds like a good opportunity for you to walk us through some examples, Christoph, of that product design simplicity.
Yeah, so on the next slide, I'm showing 6 examples here from cars and photos that I've taken at industry events in China or downloaded from official press sites. And for example, look at the top left. So the standard layout in the cockpit of a Chinese car is always in the center console. You have 2 cup holders, and then there are 2 wireless charging pads for the phone. Then you have a very, very big touch screen, a floating screen in the middle that seems to be a little bit detached from the cockpit, so it's not integrated. And then depending on the layout, there is a smaller or bigger screen above the steering wheel. And I'm just asking if this is not a missed opportunity to stand out. So you could try to do it a little bit differently. Of course, form follows function, but there are some examples that I want to mention that they do it a bit differently. For example, if you look at Omoda, so they integrate the screens more. So it's not this floating screen. So you have like one screen that goes from the, let's say, steering wheel until the center of the car. Or if you look at Avatar, so they have this some kind of panoramic vision that BMW now introduced in the Neue Klasse, but they have it since 3 years.
Mm-hmm. So taking all of this into consideration, Christoph, does it look like Chinese brands are going to be on track to meet their own sales and after-sales targets?
Yeah, good question. So if we compare the numbers that Chinese OEMs have given us in 2022, where they wanted to be in 2025, I have to say no. But I honestly think they did a good job because Europe is so diverse and it's a hard nut to crack. So in terms of sales, what we see is that a few OEMs, a few brands, they started with flagship stores, so big stores in major European cities. And this approach doesn't work in Europe. So it works in China. So people go, you go on Sunday to the mall because you work 6 days. So in China, you work until Saturday, and Saturday is not a half day that you're working. Saturday is a full working day. So you finish Saturday evening at 6, 7, or 8. So then on Sunday is your only free day. You go in the mall and you buy a car. In Europe, this doesn't work. So Europeans, they want to buy cars at dealers. And it's also important to have a strong dealer network for after sales. So don't only think about sales, also think about after sales. Of course, these dealer networks, they need time to construct. So now everyone is looking for new dealers. And this pressure to scale quickly, because you need to scale quickly because you want to be still there in 5 years. So this pressure to have a high volume very quickly, of course, opens the door to some risky short cycle tactics. So for some brands, we see very high shares of rental registrations or dealer demo registrations.
Now, product, commercial strategy, brand, all of these things influence residual values, Christoph. So how do you see Chinese brand awareness working in Europe in relation to that?
Yeah, this brings us to our last point. So marketing, or you could say brand. So of course, the Chinese products are impressive, but the brands must be known in Europe. So there are some brands like MG or BYD that they have started to build awareness. So their name means something to the majority of the European car buyers. However, the majority of the Chinese brand are still unknown in Europe. And this really takes time to build awareness and an image. And it not only takes time, it also costs a lot of money, because you need to have a lot of communication. Yeah. So I always say you cannot achieve in 1, 2, or 3 years, for which European legacy OEMs needed decades, yeah, to build this image. Of course, what can help is if you have a link to a well-established OEM. So there are different approaches. So MG is using the heritage of the old British MG brand. So it's already known, so they don't start from scratch. Another good example is Polestar. So in fact, Polestar is a Chinese EV startup, yeah, owned by Geely, but it's not seen as that in Europe. So it's more seen as a premium Scandinavian EV brand under the Volvo umbrella. Yeah. And the last point I want to take is USPs. Yeah. So every Chinese OEM that wants to be successful in Europe needs to answer the question: why should a European car buyer that can already pick amongst 40 existing European brands, why should a European car buyer buy a Chinese car? Yeah? And if this European car buyer goes for a Chinese car, why then should he pick your brand, yeah, and not a BYD or XPeng? Yeah? So you need to have, the brand needs to have a core, a USP that is easy to remember, yeah, and easy to communicate. And I always recommend to look how Hyundai and Kia did it 20 years ago when they started their very successful journey in Europe. And they came up with very long warranties, yeah, so 5 years and 7 years. And this could be a strong USP for a Chinese brand. So imagine a Chinese brand would say, our cars, yeah, they have 10 years warranty, including battery. Yeah, no fine print, so no exception, 10 years, point. So this would be a very, very strong message. This would boost residual values, yeah, and could really help to create awareness.
Thank you very much, Christoph.
Back to you, Tom.
Thank you very much. Well, that does bring us to the end of our webinar today. Thank you all so much. It is time for our Q&A session, and thank you to everyone who submitted a question so far, because there's been some great ones. Now, again, if we can't get to you today, we will send you an email following the webinar. Importantly, to begin, one of the questions, as we always get asked, is can we share the slide deck? Unfortunately, it's not something we do. However, we do share the recording of this webinar, both on Autovista 24 websites as part of a webinar coverage, and also on our YouTube channel. So you can definitely watch this whole webinar recording back and then have the slide deck there and all of our commentary to go with it. So don't be afraid, you can access it in that sense. Now, I think it's quite an interesting point here. Obviously, throughout this webinar, we've talked about Europe and cracking the code and really trying to discover the secret to entrance. Christoph, you've already kind of started answering that question. So Christian, I'll come to you first. Christian, is it really that hard to enter Europe for these Chinese brands? Surely they know their stuff.
I mean, it is hard, I think, to enter Europe, but it is not impossible. I think Christoph gave a few good examples. What is already going quite well with majority of brands entering Europe, but there's quite some room for improvements in other areas. And as we also try to show, Europe, you cannot treat Europe as a whole. I mean, we always speak about Europe, but the taste is quite different between the countries and regions. So I think this is something everyone just has to be aware of, I think. Also, I think for me, the most important topic of all of the things that Christoph mentioned, just to add to that, is the whole topic about having a USP and a clear brand image. So what is a brand really standing for? What is making you outstanding? And why should I really invest my money into you and not someone else? I think this is really key to be successful in that area, I think, to stay.
Mm-hmm. Christoph, anything to add quickly?
Yeah, I can add my experiences that I have with Chinese OEMs. So I mean, China is quite far away from Europe. We are far away from China, and from the outside perspective, Europe is often seen as one country, one market, but of course it isn't. Yeah? So just a few numbers. So we have 44 countries in Europe, not just one, 44 countries. Only inside the EU, we speak 25 different languages. And this has some clear implications because your entertainment system must have 25 languages. So if you're present in 25 markets, we often received at the beginning of the question, isn't it enough if the entertainment system is available in Chinese and English? No, it isn't. So in France, it must be French. In German, it must be German, and so on. So we have a lot of different regulations in Europe. So despite the harmonization efforts of the EU, we have many different regulations. We have a different taxation. We have different currencies. The difference in geography is huge. So if you compare Scandinavia and the south of Europe, so there are different profiles needed for cars. So Europe is difficult. So as Christian said, of course, it's not impossible, but it's a difficult task. And the more data you have to analyze this, the better it is and the easier it will be.
Interesting. There's one question coming that has really caught my attention, and I'd like to get both your answers if possible. What's your opinion on manufacturing contracting? It was touched on briefly there when we talked about BYD producing in Hungary. Of course, that was their own. Apologies, that's their own manufacturing setup. But when a car maker effectively hires another company to do their manufacturing, does that have a certain impact on how their brand is observed? Christian, do you have any particular stance on that? Does it impact how their brand is valued?
That's a good question. I think it is. It has not a huge effect, I would say, on the brand recognition. I just want to give you maybe one example about that. What could happen? So we had, don't name me on the exact date, but there was, for example, a Ford plant in Belgium, and Ford closed that, I think, in Ghent, or Genk, and it was closed. And what we really could see is that in that country, the perception, but it was maybe not optimal handled also from a PR perspective, that whole factory closing. But we see that if you don't handle this very professional from PR perspective, it could have an effect, a negative one more, if you close something. I don't know if it has a really big effect if you, on the brand perception, if you build now in Hungary a factory, especially as Hungary, I mean, maybe a little bit in Hungary, but as we know, Hungary is not the biggest EV market that we see at the moment in Europe. So will have a limited effect, I would say. So,
and of course, it differs between having. Of course, it differs between having a third-party manufacturer building your EVs for you, with BYD, and if you're doing it yourself. Christoph, anything to add there?
Yeah, it's the same opinion. So I think most car buyers are not aware where the car is manufactured, by which corporation. I know that some new OEMs, they will use Magna in Austria to build their cars. But again, I think it has no positive or negative impact if you're using that way.
Fantastic. Thank you both very much. Well, I must apologise because this has been a very short and sweet Q&A, but it is all we have time for. Again, thank you, a big thank you to everyone who submitted questions. Please don't be worried. We will reach out to you when the webinar is done with some answers to your questions, rather. But that is all we have time for today. So as mentioned before, if you're after recording this webinar, just head over to Autovista 24. And while you're there, don't forget to check out our next webinar. We're going to be looking at the road ahead, residual value trends, and the next market shifts. So another fantastic RV outlook. And if there's any products you've seen today, part of our webinar, please go to autovista.com/explore and make sure, as I said, you sign up to our next webinar, which is on the 14th of October. Now, a big thank you to the entire panel, to Christian and to Christoph for joining me today. And of course, another huge thank you to you, our wonderful audience, for attending and submitting so many excellent questions. Have a wonderful day, and we hope to see you very soon. Thank you and goodbye.